All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Friday, January 20th. Happy Friday, everybody, and happy almost weekend. Well, a little bit, a little bit of a difference from the last couple days today. Very, very strong breath today. Really good performance in terms of the indices, but yeah, the participation was just much different than what we saw the last couple days. So one of the takeaways too, I would say, was that we really got overbought in the short term. If you're looking at things like the McClellan oscillator, which is something that I tweeted out yesterday, as well as I retweeted it out today, it really got short-term overbought. So, the question was, I think, kind of coming into today, and perhaps for next week as well, is after those overbought levels get kind of come back to normal. Do buyers kind of step back in? And, obviously today's a little bit noisy with monthly option expiration, but it does feel like buyers kind of stepped back in a little bit. And, and we're also getting new information. We had Netflix that came out, right? That is one of the, FANG stocks as they call them. And, the results were not as bad as what everybody's thinking. So, I think when we get some of these bigger reports that come out, I think the expectations are really, really at this point pretty low. So it's an easier bar to jump over. However, you still need to do that, and we still have many more big earnings reports that are going to come out. So I think that will be really interesting. Another phenomenon that we're seeing right now is this layoff trade. Anytime anybody announces that they're going to have layoffs, the stock goes up. So I would like to see if there's any data behind that, but really strong performance by Google, right? Which was kind of already anticipated. I think that they were going to announce some type of layoffs, but it really makes you think. And again, this was a version point of control that was taken out, but is Apple, we're talking about this in the trading room today, is Apple the next one that announced layoffs and the stock jumps on it? Could it be that some of these companies just really overhired during the pandemic? It's possible. And cost cutting seems to be driving these stock prices, more than anything else right now for some of the beaten down names. So it's actually been really good news. So that's my quick take on it. Of course, there's some other things we could talk about when a company lays people off, and usually long term it's not a good thing. But clearly there's some short-term performance behind it. Not one other point, but I wanted to just move to the index price right now of the S&P. We did get back above these short-term moving averages. Again, the difference, one day makes, we lost them all earlier in the week. We got rejected at the 200-day moving average, and we also lost all those short-term moving averages. I think except for the 20-day moving average, but that may have fluctuated a little bit. Well, price is back above them again. So I will look at that, especially when when we've got something trending. Case in point, I'll give you something that's been trending recently, not gas futures, right? Very simple. When you see that the price action, when something's trending like this, it stays below the 5-day moving average, and price can't really get above it until the trend is done. We certainly see that to the upside too with many things, and we've seen that before with the indices. But right now we're just kind of flip-flopping back and forth. Case in point, as we come upon the end of the week, we're also just dead right in the middle of the value area, and that was something that we talked about in one of the webinars that we gave in the beginning of the year on the market webs. And what they're telling us is that for the overall market, it may be a very sideways year. You're kind of right in the middle of that, and so that kind of, like, to have that picture, I think really kind of helps expectations a little bit, and there might continue to see rotations. And case in point, what we're seeing right now is kind of a rotation a little bit out of value and into growth. Here was a chart that I put out earlier, but you could see, this performance. This is kind of more large cap growth versus index, and more large cap growth versus large cap value. And there's been some really nice outperformance to start Yeah, and it's pretty. I just had the data up, but yeah, value right now for the year, right? And we're only a couple of weeks into the year, up 6.5% versus value, only up about a percent for the year. So we've had some some changes that have taken place so far, and again, you look at the excuse me, the growth chart, and it's still kind of, it's not a knock your socks off chart, right? It's just basically moving from the lows, but we are starting to see different leadership kind of come out of this. And today it kind of just reminds me a little bit when you see software areas outperform. Here's the IGV chart, the software ETF. So again, it's starting to make a move, right? And it's been going sideways for a while. We'll have to see what happens once we get out of here. But it reminds me of some of the areas that are participating. Instead of an inflationary environment, it feels like some of these areas are more deflation. So it's kind of interesting, and speaking of that, inflation, and obviously that has a lot of implications with the Fed. But they're starting to kind of walk down a little bit of implications. Next week, the Fed will be in a quiet period, and then we'll have the next Fed meeting on February 1st. But right now, and you'll hear a bunch of talking heads on financial media debate whether or not what they think they're going to do for this Fed meeting. But I just go with what the price is telling me. Right now, Fed fund futures are pricing in 25 basis points. I don't think the Fed wants to surprise the market at this point. So, I'm thinking that, Powell might come out and do the 25 basis points and say, hey, they want to continue to see inflation come down. But maybe it's a slight more dovish meeting than what we've seen in the last couple. That remains to be seen. We'll see how that plays out. But even if you go past the February meeting, we're looking at another 25 basis points. So we've kind of said this. There's been different Fed speakers. Bullard comes out and says something different, but really it's Powell's decision. So I think what we're going to see is 25 basis points. And again, I'm just telling you what the market is pricing. I'm not making any prediction really. And then it's probably another 25 after that. And it's even implying a little bit less than that. And if you look at the implied rate, and you can go and you can look at May, June, July, but it's not getting over 5%, right? And then it starts to kind of move back down a little bit, all the way January of next year. So that should kind of give you a little bit of a picture. Now, of course, this picture will change based on if there's any data that's much different than what we've been getting. But right now, that kind of seems that is what the market is pricing in. A couple other things. I've been sending out on Substack. I've been sending out one of the scans that I run. I run many different scans, but obviously we look at a lot at volume, at price, at Tribeca Trade Group, and we have an indicator for that. So this scan that I've been sending out, I call it the out of the box scan, but it's basically using multiple time frames, and it's telling us when names are moving out of a range, out of the value area on multiple timeframes. We also weed out any names that are really extended. So, we could talk about one name that's probably, that is out of the value area, but it's not going to show up on the scan, which is AEHR, which had a monster day today, up 14%. And again, we've talked about this the last couple of days, that, possibly one of the areas of strength could be the semiconductors. AEHR had a really nice day. There's so many different semiconductors with the letter A for whatever reason, but ACLS, right? I mean, this thing barely dipped, right? I mean, this came right into the top of value and rallied pretty hard. So, really nice performance there. And we're starting to see more and more of these semiconductors act very well. Remember, NVIDIA kind of, it had a long way to get to the top of value, and it got right just there the other day, and it stalled, and it kind of came back in. But notice, again, this is something that was a big question of mine, was that, are buyers going to kind of come back in and buy the dip? And it looks pretty interesting here, NVIDIA. So if we can stay above 177.40, I think there could be a trade involved there. I could go through a number of other semi charts, but again, they're starting to look more and more constructive to me. if you notice, there's not a lot of names, right? After, what happened on Wednesday and Thursday as well, a lot of names kind of fell back inside their value area. So there's not a lot of names that kind of came back up on the report. There's what I find interesting is of this list, there's some healthcare names. SNDX came up on the scan a couple weeks ago. Again, it's a slow mover, but notice it's kind of moving up and to the right. RNA is another one that people are talking about, right? Sticking with this space, I like, and I actually took a position in this today, TMDX. Again, it's high momentum, small cap biotech, which can, have a riskier element to it, but I think, moving in the right direction. So again, position size is important. Another one too that just doesn't get that much attention is Sarepta. Sarepta is very close to moving higher, right? And again, a big difference right now between what biotech is doing. Remember, this got rejected at the Virgin point of control. It's where I took targets. Let's see if this can kind of regain this perhaps next week. But look at the difference between this chart, right, which is kind of coming out of some consolidation, right, and the XLV chart, right, which kind of looks like it's breaking down. And unless it gets back above 135.66, I think that we've got kind of a real rotation out of some of these defensive areas and into some of the more aggressive areas, and hence that chart by value versus growth. If you also want to see, you can you could slice and dice this, a couple different ways, but if you want to look at something called, just let me get the right chart up first, high beta equities versus low volatility equities, you can kind of see what's going on here too. High beta, again, is trying to really get out of this range versus low volatility. So in this ratio, with one over the other, 1.10 is a area to watch. Energy stocks are still kind of, as you saw from this scan, right? You've got a couple energy stocks in here too, right? EOG, this actually was a name that I was watching coming into today, but this had some strength to it, right? Moving back above the 50-day moving average. So again, it's nice when there's some different areas that are performing. SLB, which saw a big call spread go up today, kind of finished flat. Definitely will be a name that I'm watching next week. Had really, really good earnings. But I think they put on, what was it, a 60-65 call spread for March. A decent size. Another name that I'm watching is Halliburton, which will have earnings, but, kind of came right into this bottom of value. Again, didn't have any major momentum like tech stocks did today, but not bad as well, right? APA saw some calls today too. Right. That's something that'll be a name to watch for next week. All right, guys. So I'm going to try to keep it kind of short. Here's the performance. This is 5-day performance. Remember, this was a shortened holiday week, so it does cover last Friday. But again, you can look through some of these areas and you can kind of see where the strength is. I just wanted to touch upon emerging markets and international equities too. But look at what EEM is doing. Right, it is continue to trend higher and way above those December highs as well. IFA, which is international developed, very strong as well. So, I think it really makes sense here to see this outperformance that we're seeing in international, to be looking at these groups. And we'll have more of that in the weekend notes for members. You could go to Tribeca, so please, if you like this video and these kind of things, please like the video, subscribe to the YouTube channel. But, if you want further analysis, go to www.tribecatradegroup.com and you can sign up to be a member. I still have the special that's active, half off your first month. So if you want to check it out, it's an easy way to do it, getting 50% off your first month here. Again, my goal is to kind of really stay ahead of the trend. We were all over that today. I was noticing things like, I had alerts set up on Adobe. Workday saw some calls today. So again, I was very much open today to seeing some of these software names actually get some momentum for the day. And, Autodesk was another one that saw a little bit of calls today. SentinelOne, which I took that trade as a flyer. But you could see a lot of these things are trying to kind of make their way out of the base. ServiceNow, since McDermott was on CNBC the other day, has really been flying as well. So We're all over these moves. Again, I like to be kind of one of the first ones to talk about where the money is rotating into. So you can kind of be a little bit ahead of the curve if you become a member of Tribeca Trade Group. All right, guys, have a great weekend, and I'll see you back on Monday.